there's a quick look at the markets. So Canadian stocks up a little bit this year, but they mostly treaded water in the second quarter. The Bank of Canada has begun cutting interest rates. Our guest says there's now a 50-50 chance of another reduction in borrowing costs next month from the Bank of Canada. We're joined by Brendan Caldwell, President and Chief Executive Officer at Caldwell Investment Management. Brendan, always great to see you. You always brighten things up for us. So bring your erudition to this one, if you would. You think it's not a certainty the Bank of Canada will cut again?
Well, first off, Andrew, let me wish you a happy American Independence Day.
Yes,
as a
thank you.
Good Irishman like yourself, you have no doubt a great deal of empathy for anybody who's taken up arms against their British overlords. So even if they be the rightful rulers, whatever, it doesn't matter. Congratulations on American Independence Day. I think that the Bank of Canada will probably cut rates, and probably it will cause our dollar to weaken further. And the day that energy prices give out, if we keep cutting and the Americans don't, you could see the loonie at 60 cents. I think we could see a dramatic fall in our buying power of our government-issued fiat currency, the eponymous loonie.
Right, so the eponymous loonie, okay, getting in a dig at our currency. What would stop the Bank of Canada from cutting?
The idea that a dollar might go to 60 cents?
Okay.
Normally speaking, we might be off a little bit with the U.S. We might cut a little early. They might cut a little early. We might be first to raise rates. They might be first to raise rates. But I don't see any U.S. cuts between now and, frankly, 2025.
Whoa.
If they go on, sorry, Andrew, I caused a reaction, so please let me have it.
So that would be surprising. Jay Powell will just decide to be that cautious that he won't bring down interest rates.
Well, remember when this time, well, maybe not this time last year, but sort of late summer, early autumn last year, and certainly into the end of 2023, they were talking about 6 or 8 cuts in 2024. Well, remember that? Remember, because the bond prices went way up and bond yields came way down, and there's going to be this thing where they was going to cut rates like a whole bunch of times. We're into July, and I think they've only got one last kick at the can before the election. So I think that September is the next time the U.S. Federal Reserve would have a meeting to potentially cut rates. Now, I don't know, but if you are seen to having held rates steady all this time, then cut rates right before the election, how does they say, if you try and take a shot at the king, you better kill him. And if they do something that is seen to help Biden and Trump wins, I don't know. It seems to be a career-limiting move to everybody involved. Just the optics of trying to influence the American election that way. Plus, the Americans are they're still going. Our economy's weak, partly because, that litany of stocks that had done well and had done poorly was quite depressing that you did just before you came on with me, Andrew. It's the stocks that did the best were the ones that sucked the most. That's the technical term in 2023. So, what was it? First Quantum, and then
Kinross.
Just the ones that have done horribly are now bouncing. But there's not a Canadian stock that goes from greatness to greatness. And when it comes to the technology, your list of how the indices have done, Canada was what, 6% you said this year? The S&P up 15, the NASDAQ 22. Now, NASDAQ, despite popular rumor, isn't all tech, but tech does drive some of it. And we just have never had a tech company once in this country in my whole working career and beyond that has gone from greatness to greatness, from Mitel through Newbridge, through Nortel, through my BlackBerry. You've had companies do well and then fade. Shopify, call your office.
Shopify, it's down from 2021, but it's still a mighty force in e-commerce, Brendan.
Sure. And yes, and maybe that'll be the exception that proves the rule. But so I'm just my point is, whenever they say of any Canadian company, It's bigger than the Royal Bank now. That's as good a sell signal as you're going to get.
That's right. It's like the curse of the magazine cover as well, of course, when CEOs are on the front of the business well, back when we had business magazines, I guess. You have a stock idea for us. Motorola, that stock is up almost 25% this year. Is it a name that you like, Brendan?
Yeah, so in the U.S., Motorola is one of our core holdings in our North American equity strategy. When we think of them, there's an older technology company than BlackBerry. If you think of Motorola, you think of the flip phones or the great big brick phones that you and I carried around in like the early 90s. But Motorola is actually in the security business. It is in the communications business, more than just the phone and radio business. So police forces all over, security companies all over actually use Motorola technology. And it's probably a testament to the world as it is that it's not exactly getting it to be a safer place. So as a play on the greater investment in law enforcement and security, Motorola is one of the leading technology providers in that space.
Just very quickly, Stantec, the engineering company, up about 12%, 11% this year. And you like to look at that name as well?
Yeah, both Stantec and the company formerly known as SNC-Lavalin, Atkins Real, or Realis, I guess is how you pronounce it properly. Engineering technology firms are being re-rated much higher right now. And Stantec we've owned for a long time, and we've done very, very well, and we expect to continue to do well on it. But the former SNC, I had a client say to me this morning, now, I'm okay with doing this strategy, Brendan, as long as we don't own any SNC-Lavalin. They are just the worst people. And of course, my top holding is SNC-Lavalin. I said, well, just put your glasses on, look at the fine print. That's what we have. Because people hate it so much because of what it was, but it's reinvented itself, got rid of the construction part of the business, the Atkins Realis, and become an engineering consulting firm. I think what you've seen Stantec do, we're anticipating Atkins Realis do going forward. So we really like the engineering space. There's so much infrastructure being built in North America, from mini nuclear plants to hardening of electrical grids. There's so much to do that we think that area, and there are two Canadian companies that are leading the way in that. So we like those.